Welcome back. You're watching Power Breakfast on CNBC TV 18. Now, the decline in the U.S. markets was accelerated by a weaker than expected reading on the U.S. manufacturing sector. The ISM's manufacturing index fell to 54.1 in December. That compares with expectation of a reading closer towards the 58-odd mark. Here's an opinion coming in from Mark Zandi of Moody's Analytics on the growth prospects of the U.S. economy.
The manufacturing base is growing, but the rate of growth is clearly slowing, particularly from the very rapid pace of growth that we were experiencing this time last year. I mean, remember back a year ago, we had these massive tax cuts, and that juiced up growth. So we're now seeing the backside of that, growth slowing down. And then you mix in the effects of the trade war, and manufacturers are feeling it. So growth is definitively slowing. There's no doubt about it. But the manufacturing base is still growing. And as long as the manufacturing base is growing, that means the rest of the U.S. economy, which is obviously very service-oriented, will grow as well. The decline in the stock market, the decline in long-term interest rates, all show a high level of angst. But no, I don't think the U.S. economy is headed towards a recession, certainly not in 2019. I mean, there's still a lot of fiscal stimulus in the economy. This year, it's mostly about increases in government spending. Last year, it was about the tax cuts. This year, it's about government spending. And with unemployment as low as it is and jobs being created at the pace that they're being created and wage growth accelerating, it'll take an awful lot to derail the economy to push it into recession.
Well, let's talk about the domestic markets then. Back home on Dalal Street, market ended low for the second consecutive day, with the key indices ending at day's low. Nifty gave up the 10,700 mark amid sell-off in banks, oil and gas and metal stocks. Sensex too shed over 350 points, and mid-caps, they succumbed to selling pressure post-lunch to end with cuts of around 150 points. The bank Nifty gave up 27,000 as it shed nearly 250-odd points. And Ekta joins us to get us all the market cues that we need to watch out for today. Ekta, good morning.
Hi, morning. Well, like you mentioned, yesterday was actually a decline for the markets that we saw. So the markets were down for the second consecutive session. And really, what is the big theme which is playing out for the markets is a growth scare which seems to be spooking global markets at this point in time. So for yesterday, it was the China PMI, the US PMI, Apple's guidance cut, which really impacted sentiment across US markets as well as the Indian markets. I'm talking about the day before. And India reported a disappointing auto sales for December as well. Yesterday, disappointing in terms of the FIIs also, because you can see the gross figures coming back, participation coming back, and there was a net sell of over 900 odd crores in yesterday's trading session. In terms of cues today, the US markets have closed lower. We have the jobless claims which came in higher than estimates, and we had the ISM manufacturing data which disappointed the street in terms of another piece of macro data, growth data, which was disappointing. So Asia currently lower, and also we had Brent crude which spiked up a little bit in terms of an intraday basis. So that would be important to watch out for. I think around $54 to $55 per barrel, so $55.46 per barrel for Brent crude. So all of these all of these cues combined, the lower Asian markets, lower US markets, higher Brent crude, is indicating that SGX is probably going to start in the red. Whether we manage to see a buy on dips, that would be important, considering that we've already declined from levels of over 10,900, so that would be important. Currently, the Nifty is below the 20 DMA, 100 DMA, as well as the 200 DMA, but I would watch now closely for the 50 DMA, which stands at 10,626.3, as well as the recent low of 10,534 that the Nifty had hit on the 26th of December, and we had managed to scale back up over levels of around 10,900 from those levels. So that would be important to watch out for. Other cues, the Fed Reserve Chair Jerome Powell is going to participate in a panel at the America Economic Association Jan 4th to 6th. So that's today for the next 2 days. So commentary with regards to the Fed balance sheet, etc., would be watched out very closely by the markets. And sources to CNBC TV 18 have said that the government is likely to announce a package for the agri sector, and that would focus on reducing input costs, improving income security. So that would obviously be a concern for the markets in terms of the quantum, and obviously the yields would be very closely watched on account of that.
All right, Ekta, so those are all the cues that are stacked up for us. But tell us some stock-specific action that you're looking at.
Well, I'm looking at GM Breweries because they came out with numbers. The revenue was up 6%, EBITDA was down 27%, margins 19.9%, profit down 25%. So that stock would be in focus. Sun Pharma has completed a transaction to acquire Polar Pharma, so that stock is in focus. Nestle has said that in reaction to the court order, they've said they welcomed the orders passed by the Supreme Court in the Maggi noodles matter today. Torrent Power has said they won a distribution order in Thane for 20 years. NHPC has said there's a loss in the Parbati Power 3 unit, which stands, there was a shutdown. It stood at around 30.14 crores. Relcom has filed a contempt plea for non-grant of NOC by the DOT, or the Department of Telecom, for the spectrum sale to Jio. Power Grid has said they've approved a 380 crore investment for 2 projects, and CESC would be in focus because they've been declared as a successful bidder for appointment as distribution franchisee for Maharashtra State Electricity Distribution. And lastly, Max India would be holding a call with regards to the transaction with Radiant today. That call will take place at noon, so those stocks would, Max India would be in focus.
Well, thanks a lot for that, Ekta. Well, let's move on, and it's time for a break. Up next, the government plans on increasing the MSP to give relief to the farmers' distress. More details when we return.